Hello friends, I'm Anil once again here on behalf of eDot Academy, and we are going to start our seventh chapter in which we will be discussing about the role of RBI, role of EXIM Bank and Fema and FEDAI. So starting with the EXIM Bank, we can see what is the role of EXIM Bank. EXIM Bank was established in the year 1981. I'll repeat once again here, EXIM Bank was started by Government of India in 1981 with the objective of financing import and export trade, especially in the long-term basis. So what are the functions of EXIM Bank? The functions of EXIM banks are offering export at competitive rate, you can see here. So this is very important. And developing alternative financial solution data information about the new export opportunity. That means they also export the possibility of having the new avenues for the export. And they also respond to the export problem. Sometimes what happens, the exporter they face some problem in international level, so they also respond to their problem and pursue the policy solution. So as per the policy, they also find out the solution for them. Now what are the finance activities of EXIM Bank? So EXIM Bank, they arrange suppliers credit, buyers credit, and consultancy and technical services for the exporter. Okay, so I'll repeat once again. They provide the suppliers credit, buyers credit, consultancy services, and technical services for the exporter. They also provide the pre-shipment credit over 6 months, setting up EOU, export oriented unit. Okay, that means they provide the pre-shipment credit also more than 6 months, setting up export oriented unit in EPZ, means export processing zones. Our country, that means our government of India have decided some zones. They are located nearby cities, nearby big cities, export processing zones where they provide the pre-shipment credit for setting up EOU, means export oriented unit. And they also finance DTA, financing for DTA with domestic tariff area, because some of the units which are producing the goods which are consumed domestically, whatever they are producing, but they are consumed. But if they are able to export minimum 25% of their annual sales, then they also finance for that manufacturing units. Okay, and in addition to that, the EXIM Bank also finance for import of computer system and development of software. Okay, because many components in India are imported from other countries like China and Korea, so South Korea. So they also finance for that, and they also help in setting up the plant and machinery and technical upgradation, because without technical upgradation, the development of industries is not possible, and export is totally dependent on the development of industries. So they also help in procuring plant and machinery and also help in technical upgradation. Okay, and they also help in overseas investment, and they also provide the line of credit to exporter on the basis of which they receive the export order. So I'll make it clear what is called line of credit. So line of credit enable the Indian exporter to find out new geographical countries, new geographical areas where their avenue of export is there. Okay, where they can expand their business activity. So this EXIM Bank also help to extend the line of credit to exporter which are located in that geographical areas. And EXIM Bank also perform following function for the commercial banks, because commercial bank are the uh, uh, main role playing, because they provide the credit facility. So export bill rediscounting, usage bill should not exceed 180 days. Okay, so they also help the bank to rediscount the export bill. Okay, SSI export rediscounting means they also refinance the export credit refinance of term loan of EOU, export oriented units. Okay, and they also help up to 100%, up to 100%. You can see here up to 100% participate with the bank in issuance of guarantee. Where guarantee they issue? In software capital. Okay, capital good up to 100% participate means the EXIM bank they participate and they help bank in issuing of letter of credit. Beside above, EXIM bank also arrange re-lending facilities for overseas bank, sanction direct credit to foreign importer and arrange line of credit for the foreign importer also. So what is line of credit? So it is helping the other countries which are poor countries, means to help the importer which are located in poor countries to get them credit so that they can purchase our commodities from Indian market. So when they are purchasing from Indian market, so our export will be boosted. Now we'll see what is deferred payment guarantee. So it is normally beyond 6 months. You can see it is normally beyond 6 months and meant for status holder exporter only. SHE, status holder exporter only. Banks can approve proposal up to 25 crore. Okay, that means bank is authorized to approve the proposal up to 25 crore. But if this amount is more than 25 crore and up to 100 crore, then EXIM banks come into play. The role of EXIM bank come here. That means if proposal is more than 25 but up to 100 crore, then the case is referred to the EXIM bank. And in anyhow, if the proposal is more than 100 crore, then RBI, FEDAI, ECGC, EXIM bank, they work together. So proposal will be considered by inter-institutional working group from member of RBI, FEDAI, ECGC and EXIM bank. So I'll repeat once again here. If deferred payment guarantee proposal is up to 25 crore, bank will handle. Okay, no problem. But if proposal is more than 25 crore but less than 100, up to 100, then EXIM bank will come into play. And if proposal is more than 100 crore, then working group of RBI, FEDAI, ECGC and EXIM bank will come into play. Okay, and there are some other services which are being provided by EXIM bank. So you can see here, project export. So that means they also export of engineering goods for on deferred. They also help to get the export of engineering goods from India. Okay, and turnkey projects also. Turnkey projects are those projects which are ready to use. Means nothing, no installation, nothing is required. Just bring your proposal, install there, then importer will be able to use immediately. That's called turnkey project. So they also help in exporting the turnkey project also. Okay, and construction project funded facility is very, very important. EXIM bank is a nodal agency designated by Government of India to manage export marketing fund, EMF, export marketing fund, which consists of loan made available to India by World Bank. Okay, so there are actually three categories of EMF: EMF number 1, EMF number 2, EMF number 3. Okay, EMF 1 is there, and EMF 3 categories are there. So 1, 2, and 3 categories are there. Okay, so EMF 1 consists of USD 250 million for industrial export. I'll repeat here. So this is the share given by World Bank to India that consists of USD 250 million for industrial export, and EMF 2 USD 37 million for industrial, for this industrial development. Okay, I can say export development. So I'll repeat once again. USD 250 million comes under EMF 1, that is for industrial export, and USD 37 under EMF2, that is for export development. And third one is the export marketing. No funding is done in EMF3, that is for own resources. Okay, so these are the EMF1, 2, 3. Now we'll see what is the role of RBI here. So role of RBI is very exhaustive, very large. RBI is empowered to control and regulate foreign exchange reserve, supervise foreign exchange dealing, maintain external value of rupees. So they control everything. They supervise internationally and domestically. National, international level, they carry out all the monetary control. Okay, now coming to the FEMA. So FEMA was enacted in year 1999 and it replaced FERA. Okay, or we can say FERA was replaced by FEMA. So FERA means Foreign Exchange Regulation Act. It was replaced by FEMA, Foreign Exchange Management Act, in the year 1999. So there are some provisions of FEMA. So no draw of exchange for Nepal and Bhutan. That means if somebody is visiting to Nepal and Bhutan, the foreign exchange is not permitted. That means we can use our Indian rupee while going to Nepal and Bhutan. Okay, so we can use our Indian rupee while visiting Nepal and Bhutan. Okay, now if you are exchanging your amount, you are visiting some other country other than Nepal and Bhutan, then you have to exchange your Indian rupee to that country currency. For that, you can exchange up to rupees 50,000 in cash. That means you can exchange rupees 50,000 in cash. But if your amount is more than 50,000 rupees, I'm telling here rupees. Okay, keep in mind, not dollar. Rupees 50,000 you can encash in cash. You can convert into all other currency of international. But if your amount is more, then you have to pay by either cross DD or cross check, DD or NFT or RTGS. I mean no cash. What your mode of transfer is there, you do, but no cash. Okay. Now there is also cap on the visiting to foreign currency, how much amount you can bring. So if you are visiting to any foreign country, you can take only 3,000 US dollar. Keep in mind 3,000 US dollar and not more than that. Okay, but there is some relaxation also here. So 4 countries are here. So those who are having relaxation: Libya and Iraq. Limit is rupees 5, not rupees, USD 5,000. Okay, USD 5,000. So for other countries, USD was 3,000. For Iraq and Libya, it is 5,000. Some relaxation has been given. You can carry up to 5,000. But 2 more countries are there. They have got everything. No relaxation. Everything, all relaxations they have got. No restrictions are there. So Iran and Russia. So Iran and Russia are the 2 countries where no restrictions there. You can carry any amount of money. So I'll reiterate here. Libya and Iraq. Okay. Rupees 5,000. So not rupees, sorry. It's coming my mind. USD 5,000. And Iran, Russia, no restriction. You can carry any amount of USD dollar. Okay. Other countries, restriction is up to 3,000. And if you are visiting Nepal and Bhutan, no conversion. You can use your Indian rupee. Okay. And if you are converting Indian rupee to other foreign currency, up to 50,000 rupees you can pay by cash. Otherwise, if you are taking more, then you have to pay by check, DD, NFT, RTGS, whatever mode of transfer is there. Okay. So one more point is very, very important. If any Indian citizen is returning from foreign tour and he's left some amount unspent, then he can retain up to 2,000 rupees. Okay. But there is also some time limit is there. Unspent currency must be surrendered within period of 180 days. Okay. He can surrender to any AD, an authorized dealer who's authorized to deal with the foreign currency. He can surrender within 180 days. Okay. Or one more rule is that he can deposit to his account. What types of account? RFC, RFCT, and whatever is there. So means account maintained in foreign currency only, like RFC, RFCD. He can deposit or he can return to the AD. Now, under LRS, Liberalized Remittance Scheme, you can spend only, this figure is only all this USD only. Okay, all figure is USD, and amount is $250,000 USD. And anybody visiting any foreign, you can spend only $250,000 per financial year. Business purpose, $250,000 per financial year. Seminar conference, $250,000 financial year. Employment immigration, $250,000 per financial year. Okay, so cap is there. You can remit or you can spend whatever you want. Okay, so limit is only 250,000 per annum per individual. Okay, and it is amount in dollar. And similarly, if study purpose is there, so study purpose, same amount is there, $250,000 per academic year. So not per financial year, per academic year you can spend, but some relaxation is also there. If your amount is more, that means your expenditure is more, above the 250,000, then no problem, you can spend more also, but you have that's supported with the estimate from the any educational institute where you are studying. Okay, that means it must be supported by document. Your expenditure is more than 250,000. Then they have to give estimate. Okay, hostel facility is there, tuition fees is there. So totaling is more than 2 lakh. No problem. You can spend more. Okay, and donation and gift, same amount 250,000 you can give to relative, but restriction is 250,000 per annum. Okay. Similarly, in addition to that, for medical facility and for treatment of your disease, you can spend more than 250,000, but that must be supported from the document from the hospital. Okay. Now, for the consultancy services, the limit is that for consultancy services, you can spend up to 1 crore rupees. Okay. Not crore rupees, dollars. 1 crore dollar. You can spend up to 1 crore dollar consultancy services, but that is for the infrastructure project. Okay, and for other project it is only 1 lakh USD. So I'll repeat once again here: consultancy services, the cap is 1 crore USD, and for other it is consultancy services involving in project infrastructure, means project infrastructure, and for other project it is 1 lakh rupees. And talking about the debit card, credit card, there is no additional facility given to debit card, credit card. This is only within the limit of your personal expenditure. That means only within 250,000 you can spend in debit card and credit card. Okay, and ED, that means authorized dealer can release foreign exchange before 50 days. That means ahead of your journey. Okay, so if you are moving, let's say today is 2nd September, so before 60 days you can take the amount. Okay, before 60 days, before our journey 60 days, you can take the amount in foreign currency from the ED. Okay, so here now next moving ahead, here's a list of documents or returns to be submitted by the banks to RBI. Okay, so here the list banks. Talking about the banks will submit the return. R, very famous return is here. R return. Forex operations fortnightly. So this return is submitted by banks in fortnightly, means 15 days. Okay, fortnight means 2 weeks. So in 2 weeks they R return they submit. Forex operation, all forex operation they make the return R. BL statement, balance in Nosto and Vosto account. Nosto, our account with you, and Vosto means your account with us. So BL account, balance in Nosto Vosto account submitted in BL account. Stat 5, transaction in FCNRB account. Okay, FCNRB account, foreign currency non-resident, Indian B account, bank. So stat 5 and stat 8 is transaction in NRE and NR account. So whatever transaction is being carried by NRE and account by NRI, so that statement will be submitted in stat 8. Stat 5 is for FCNRB and stat 8 is for NRE and NRO account. Okay, and one more is LRS statement, liberalized remittance scheme. We have already seen the amount is up to $250,000. Amount is 250,000 USD. They can spend in a financial year. Okay, so LRS statement given by the bank. Okay, next it is NRD CSR. NRD stand for non-resident deposit. And CSR means consolidate. CSR means consolidated single return. Okay, NRD, non-resident deposit, consolidated single return. NRD is CSR. Okay, so this is the consolidated data on non-resident deposits. Okay, IBS, International Banking Statistics, this is submitted on quarterly basis on all international assets and liabilities. Is very very important. है ना? Assets and liability. है ना? So assets and liability, that means all international assets and liabilities is given the IBS. Okay, moving ahead. Trade credit statement, buyers, suppliers credit, we have already seen. So this is also given trade credit statement. That means how much you have given to the buyer's credit, how much you given to supplier's credit. Okay. Then XOS, overdue export bill. Okay, because you have exported something and you have not paid. So overdue export, you have not received. Sorry, you have exported but you have not received the amount from the foreign country. So that will be given in XOS form. Okay, and BF, import remittance affected but bill of entry not submitted. That means you have paid the amount. Okay, but bill of entry you have not submitted to the bank. Then in case bank will submit. And what is time period? That means bill of entry you are not submitted for more than 3 months. You have paid today, 2nd September, and 3 months have passed. Like October, November, December. It has come January, 3 months passed. So in that case, that will be reflected in this BEF. Submitted by the bank to the RBI. Okay, ETX form, seeking relaxation from RBI after expiry of 12 months when export proceeds are not received. Okay, that means when export proceeds are not received, then this ETX form is for seeking relaxation from RBI. Okay, this is given by the individual and through bank it is submitted to RBI. Okay, now moving ahead, we'll see some of the account. That means RFC account. Non-resident foreign currency account is opened by Indian resident who were earlier NRI. Means who were NRI but they have returned to India for permanent settlement, then they can open the RFC account in foreign currency. Okay, whatever forex is received by them, they will deposit in this account, RFC account. And this can be opened in saving bank, current account, FD, and they can make the term deposit also, and TD also, and received proceed a receipt from overseas. Okay, and this fund is freely repatriable. Okay, repatriable means they can transfer to the foreign countries also. One more account is there, RFCD, resident foreign currency domestic. So this is for the only resident Indians only. They were not NRI, so they can open for any type of forex deposit. Okay, by Indian resident who visit abroad and bring them foreign exchange, or you can get some as a gift. Some relatives are visiting from abroad and they have given you some, okay, $200. So where you keep this $200, or you have received some honorarium from somebody. Okay, then this, or you have visited the foreign and you have some unspent money with you, then you can deposit in RFCD account. Okay, and one more important point is here, RFCD account is only current account in nature. Okay, that means no interest will be paid. Okay, this is CA, current account, whereas RFC is not current. Current SB, everything is there, SB, CA, and FD, and there you get the interest. So that is RFC is for the NRI, now has become resident, and RFCD is for the resident Indian only. Okay. Now we'll see, we're moving ahead, we'll see FEDAI. So FEDAI is nothing but Foreign Exchange Association of India. Foreign Exchange Association of India, FEDAI. So correct name is Foreign Exchange Dealers Association of India. Okay. FEDAI stands for Foreign Exchange Dealers Association of India. I'll repeat once again here. What is full form of FEDAI? FEDAI. It is Foreign Exchange Dealers Association of India. So it is non-profit organization. So all public sector banks, private banks, foreign banks, and cooperative banks are its member. Okay. What are the functions of FEDAI? FEDAI actually dealing with foreign because it is association of dealers. So they make the foreign uniform rules for all. Okay, because many bankers are involved, है ना? Many dealers are involved, है ना? Many exporters are involved, many importers from other countries also involved, है ना? Importer from other countries, our countries also involved. So they make the uniform rules for all. Okay, they also provide training. They also provide training to bankers, है ना? How to deal with the forex, है ना? Providing guidance and information time to time because this forex market is very versatile, keep on changing, है ना? Many factors are which keep on affecting, है ना? International market, international production, international rules and regulations. Many countries are having their different rules, है ना? They keep on changing. So because we are dealing many countries at once, so they provide time information time to time. So what are the important rules they deal? Starting with that, you can see export transaction. So export transaction means forex liability must be crystallized into Indian rupee on 30th day. This is very important. Keep in mind. I'll repeat once again here. Forex liability export transaction. Keep in mind. Forex liability must be crystallized into Indian rupee on 30th day expiry of NTP, notional transit period. Notional transit period. Okay. In case of side bill. Side bill means immediate bill. And on 30th day after notional due date in case of usance bill. If usance bill has been drawn, then it is just, I will repeat once again here so that you can differentiate. So forex liability must be crystallized into Indian rupee on 30th day after expiry of notional transit day. That means if today notional transit period is expiring, so you count 1, 2, 3, 4, 5. Today is 2nd September, so 2nd October will be the due date for this. Okay, and this is in case of side bill. But in case of usance bill, then 30th day after notional due date. So we have to count the notional due date also. Then let's say notional due date is falling on 1st December. Okay, then after 30th day, notional due date is something different. So after 30th day means you can add 31st December like this. Okay. Rule has since been relaxed and bank can form its own rule for number of days for crystallization. But this rule has been framed by FEDAI. But okay, they have given some elections also, because so they would listen. Okay, bank they can make their own rule for their business purpose. Okay, concessional rate of interest is applied up to national due date or up to value date of realization of export which one is earlier. So if they are crystallizing, that means you can get some concessional rate of interest. Okay. Now moving ahead, import transaction. So for import transaction, retirement of import bill, whether under LC or otherwise, bank. So selling rate will on date of retirement or forward rate will be applied. Okay, so that you have already stated. Now next, DP bill site. So DP bill site are retired after crystallization on 10th day after receipt. Okay, so DP bill they retire after crystallization on 10th day after receipt, and DA bill retire after on due date. So keep in mind DP 10th day and DA on due date. What is full form DP? Documents against payment and document against acceptance for DA. Okay. Next, moving here, all foreign currency bills under LC, if not returned or receipt, shall be crystallized into Indian liability on 10th day after date of receipt of document on TT selling date. It's very important. Now we'll deal with the numericals also later on. So you can see here, all foreign currency bills under LC, if not retired on receipt, shall be crystallized into Indian liability on 10th day after date of receipt. Okay, what is the rate? At TT selling date. Understood? Now we'll see what are the normal transit period is. 25 for export bill, 3 days for rupee bill drawn under LC and payable locally. Okay, 3 days for the rupee bill drawn under LC and payable locally. 7 days for rupee bill drawn under LC and payable at other center. 20 days for rupee bill not drawn under LC. For export to Iraq, normal transit period is 60 days. Okay, now one more point has come here, very important point. Compensation on delayed payment. Okay, all foreign inward remittance. Keep in mind, inward remittance, that means we are receiving the payment. Okay, all foreign remittance payment up to USD 10,000. Okay, 10,000. Huh? It's not here, like is not here. Only 10,000. Should be converted into Indian rupee immediately. It's very important. Proceeds of any inward remittance should be credited to the account within 5 days. That is very important. And advice of receipt is to be sent within 2 days. Failing which compensation 2% above SB account. SB rate will be paid to the beneficiary. So very, very important. So inward remittance, that means you have to credit within 5 days, and receipt must be sent within 2 days, and failing which the bank has to pay 2% rate above SB rate. Saving bank account rate, they will pay more than that. Okay, this point is very, very important. Now we'll see briefly what is contract for a forward contract. So exchange forward contract will be for definite amount and periods. Keep in mind. You have to mention especially that amount must be fixed and period must be fixed. Okay, there should not be ambiguity. So contract must state first and last day of contract. For example, 1st to 31st January. So no confusion. Starting 1st, 31st last. Okay. Or 17th January to 16th February. So date is fixed. So similarly, amount also must be mentioned. So there should not be any doubt in this. So date must be fixed. First and last. Do not say okay for the period of 15 days. So that it's not starting and end. For contract up to 1 month, option period for delivery may be specified. Okay, so if contract up to, then option delivery may be specified. In case of extension of contract, previous contract will be cancelled at TT buying rate or TT selling rate, as the case may be. Okay, it is actually converted into the reverse order. So if contract was for the selling, so you apply the TT buying rate. If contract was for the buying, you will apply the TT selling rate. That means it is always reverse. Okay, so overdue contracts are liable to be cancelled on 7th working day after maturity date. Okay, if no instructions are received, that means the contract which has become overdue. Let's say today one contract is expiring. Today is 2nd September, and so of 7th working day, after 7th working day, keep in mind, not 7 days. So 7th working day you have to count excluding Sunday. If Sunday is coming here, so after maturity, if no instructions are received, okay, the contract must state first and last day of contract. So today's day must be mentioned. So like contract is expiring on 2nd September. So you can say okay, it's expiring. So 7th working day you can count, and you can cancel the contract. Bank are now free to fix their own rate of commission and margins. Okay, if contract is cancelled, so they can fix their own commission, and normally they keep the fixed commission. Okay, now we're dealing with external commercial borrowings, or the medium and long-term loans as permitted by RBI for the purpose. External commerce, now that means now inside the country is not there. We will be borrowing from the outside of the country. Okay, so fresh investment, investment, expansion of existing facilities. That means this. What is the purpose? Fresh investment, expansion of existing facilities, and trade credit, buyer's credit, seller's credit for 3 years or more. Okay, because buyers may be from other country, seller may be in our country, seller may be other country, buyers may be other country. So this external borrowing also done. Now, some of the here are 2 routes actually, basically automatic routes and approval route. So we'll see both the routes here. Under automatic route, external commercial borrowing for investment in real sector, industrial sector, and infrastructure do not require RBI approval. Okay, so RBI is not coming into picture, but it can be availed by company registered under Indian Companies Act. Okay, that means the company must be registered, and fund to be raised from internationally recognized source such as banks, capital market. Anybody cannot give, okay, I want to give. So fund may be raised from internationally recognized source. Now this cap also maximum amount USD 20 million with minimum average maturity 3 years. Okay, and USD 50 million with average maturity of 5 years. So 23, 55. 20 million minimum average maturity 3 years, and USD 50 million, then average maturity 5 years. In all in cost selling, so all in cost selling is LIBOR plus 350 BPS for ECB up to 5 years. This part is not very important. And LIBOR plus 500 BPS for ECB 5 years. Okay, so you can link with this ECB up to 5 years, LIBOR plus 350 and LIBOR plus 500 for ECB above 5 years. Okay, now we are coming to approval route. Under this route, funds are borrowed after seeking approval from RBI. So ECB is not falling under automatic rules or covered under approval rates. You like your this lender is not recognized, so you have to take approval from RBI. Okay, your company is not registered, then you can take approval from RBI. So under this route, issuance of guaranteed and standby LC are not allowed. Okay, funds are to be raised from recognized lender with similar caps, all in cost ceiling. Okay, so you can take the fund, but the lender must be recognized. Now, here are some depository receipts. So number one is the ADR, GDR, EDR, GDR, and IDR. GDR stands for Global Depository Receipt. IDR stands for Indian Depository Receipt, and ADR for American Depository Receipt. Okay, so we'll see one by one. So American Depository Receipt are certificates issued by US bank representing specified number of shares on non-US companies. That means when they receipt a certificate issued by US bank and a number of shares of non-US companies. That means when they purchase the share of non-US companies, means other than US companies. So that becomes ADR. So these are issued in capital market of US alone. These represent securities of companies of other countries. These securities of companies of other countries, because other than US means other countries only. Okay, these securities are traded in US market. Naturally, US bank is depository in this case. Okay, and ADR is the evidence of ownership for underlying shares. So because they will come purchasing the shares of other companies of other countries, so this is called ADR. Okay, unsponsored ADR, it is arrangement initiated by US brokers, US depository bank creates such ADR unsponsored. The depository has to register ADR with SEC. Means now ADR are divided into two parts, unsponsored and sponsored. Okay, so unsponsored means US broker, US depository bank, and sponsored means US company. Company initiate the process. So company, and here the broker. So sponsored is company, US company. So under sponsored ADR, it promotes the company's ADR in the USA. It choose single depository bank, registration with SEC not mandatory. Okay, and unsponsored, this registration is compulsory. Okay, so this is the main difference between unsponsored and sponsored. Okay, unsponsored means registration is compulsory, sponsored means registration are compulsory, and unsponsored means US broker, US depository bank, and sponsored means any US company. Okay, now next moving ahead, GDR. So same as ADR, GDR are also here, same, is a dollar dominated instrument with the following features. Traded in stock exchange of Europe. है ना? The ADR was America, it is Europe. It represents shares of other countries. Okay, other than Europe. Okay. Depository bank in Europe acquired these shares and issue receipt. So you can compare with the ADR, same with the GDR. है ना? GDR don't carry voting right, and dividend paid in local currency, and there is no exchange risk for the issuing company. Okay. And but one more important point is that GDR are normally listed in Luxembourg exchange, eh, and traded in OTC market, London, and private placement in USA. Okay. Now IDR, same as IDR, है ना? Indian deposit receipt are traded in local exchange and represent security of overseas companies. So that means somebody is purchasing the shares of other companies which are located outside of India. Huh? So these are the Indian deposit receipt. Okay. Now one more form is here, that is a currency declaration form. CDF is required to be submitted by person on arrival in India at airport to the custom authorities in the following cases. Okay, because when you will come back, so you will be holding some foreign currency. So if your aggregate foreign currency is more than 10,000 US dollar, then you have to declare in CDF form. Okay, so this 10,000 is including your TCs, your currency, everything will including, and only notes cash portion, then 5,000. That means cash sitting what is USD 5,000 if only cash or equivalent, and 10,000 means foreign currency and DD, traveler check, what was there, then you declare the CDF form. Okay, so with this we'll finish our class. So one piece of advice I want to give you, this is the revision class. So I'm very sorry everything cannot be covered in the short duration. You may refer your book also for any clarification, and I'm trying to cover everything in the short duration. So please bear with me, please help me in doing this job for you. Okay, so stay tuned with me for the next video. Thank you very much. Bye. Good day. Enjoy the day.